Good evening, all. Ira Epstein of Linn and Associates from the deep freeze of Chicago, Illinois, and it is cold. They're saying we may go to single digits without a wind chill, so I think that's pretty cold. Yet we're going to be up near 48 to 50 later in the week, so you go figure. It's a strange winter. But in any case, it's a fun market. It is today, Monday, and we are now at the 6th of December, 2021, about 6:55 p.m. Central Time. A little bit of a lift in the stock market tonight, and the big question is, has this whole event been no more than a bounce off a market that got too oversold, or is it the beginning of something that might carry into the first of the year? It's hard to tell. The chart action, as we'll get to it, you're going to see in the financial markets. In the gold market, the battleground's pretty clear. It's between the 1770, 1790 area, just back and forth right here. The silver still looks to me a bit in the bear camp. The copper market keeps going up to the 18-day average, the 100 finding resistance. You'll see that in a minute there. Dollar's still strong compared to a number of foreign currencies. And here we are back at the $73 mark in the Brent. So the Saudis have to be smiling. They have to be very happy with what they're seeing. I question if we're not completely getting overdone in the nat gas, just getting very cheap here in the what are we, in the 360s all of a sudden? This is a market that was 460 about a month ago. So it has lost 25% of its value just like that, and I love it because when my heating bill comes, I'm assuming that sooner or later I'll see a break in the price from what it could have been. As we take a look at a weekly chart of gold, the market is still underneath the 18-week average of closes at 1790.90. That means the bias is to the downside. When we take a look at a bar chart of action, there's nothing pretty on that chart that I'm seeing. When you look at the swing lines, you still have lower highs, lower lows. That's bearish action until you get back up and over that high under the current chart pattern. The 100 and 200-day average of closes, the combination, the gray and the green, are right above the market in that 1794 zone. That's why I say the market falls into here in this, I'll call it the 1770 area recently, back up into that area, and it finds the resistance. And if you look at momentum, it's embedded. So until you lose this reading, and you lose that when the red line closes over 21. Without that occurring, I still look for this market on rallies to be getting sold. When I take a look at the gold-silver ratio, we got back up to this old high area. We'll see if the market can pop through that right now. It hasn't done it yet, but silver still looks bearish. It too has an embedded reading. So we've got both of the metals with the strongest bear signal I have on a daily chart embedded bear readings. It's when the momentum of the slow stochastic converts itself and locks into a downtrend by staying sideways under a 20 level. Very bearish action, often runs in front of price declines. We'll see if that's the case. In the copper market, as I started you off here, the market has got resistance at that 18-day average of closes. The real pattern, though, has been that you dropped to the Bollinger Band, went up to the upper band top, back to the lower band top, back to the center, and it's a market searching for what to do. Now, the cross currents are pretty ominous here. One side, if Moderna is correct, the CEO, and we're going to see even worse picture out of this Omicron variant, bad. But if, as we're hearing from Pfizer and seeing in the news every day, those that are getting this aren't flooding the hospitals with the deaths that we've normally seen with the Delta variant. In fact, in the States, the Delta variant is still the more lethal of the two variants and still the one in many hospitals flooding the hospitals where people haven't been vaccinated. In America, as quiet as it sounds, I heard today them talking, we still have nationwide about 100,000 cases a day and about 1,000 deaths a day. That's not a little bit of a number. It's still an important number. You know, we think, it's going away. New York City today, if you were paying attention, the mayor and one of his goodbye guys, I'm leaving town. Let me tell you what I'll do for you. In order to get into a restaurant, if you're a 5 to 11-year-old, you have to have a vaccination. I think that's starting on December 14th or something. And then if you want to go to your private employer, private employer, you have to show proof, I think it's of a double vaccine. So they are really cracking down there. Whether that gets challenged, I couldn't tell you. But here's the good news and why I'm talking about it during copper. Because copper's looking for situations in which the situation pulls back. You see that this current variant isn't the problem it could have been. People can get back to their workplace, the supply chains, the factories start producing goods. They're going to use this, and from there on, maybe you get the bid out of that. That's what this market's so in need of. In the platinum market, very bearish. Still the embedded reading like the gold and the silver, but you have the palladium market going, I don't want to be there anymore. You lost the embedded reading. So when you lose that reading, and today is Monday, you got a reading of 23.7. You see that right there? I'm now looking that unless the market collapses tomorrow, the odds strongly favor price and the 18-day average are going to try to make a run at each other. Now, do they have to? Well, unless you're going to re-embed, that's typically the story. It doesn't always work. Nothing I know in charting always works. You're playing the probabilities of the higher risk patterns versus the lower risk patterns, so on and so forth. In the dollar index, notice how the market's been in a trend that's down, but it has stayed over the 18-day average, so the bias is up. The filter on the swing line, which tells you what the trend is the 18-day average of closes. When the market is over it and the trend is down, it's saying, it's just a market that is correcting back to that number, looking to see if it can find support there and reverse the trend. Very frankly, any move tomorrow over 96.44.5, the odds favor that that is going to be the case, and you could be looking at the next number, 9,700. If you were to get over that number and then reverse and close back under the 18-day average, I'd be going back to the drawing board. So I'm waiting to see just where these markets want to go. And that's the interesting thing. Because being at the Board of Trade, being with a group of people that I've been with, the Linn group I've been with most of my adult life, and I can tell you, they bring on good people with research, and that's the key. So whether you're an options trader, a futures trader, a strategist with spreads, they are talking about it, not just me. They write on all these markets, and then I supplement for my clientele my thoughts on the markets in addition to these. How do you get a free trial to that? And the word is free. You get to see what our clients see for a very short period of time, but we'll let you see it for a week or so. Give us a call or just go to our website, and on the top left it says free offers. Take your pick up there and go with that. I'm Ira Epstein. I'll talk to you tomorrow.